Hi, Mark Homer here. I'm just digesting the Chancellor's latest injection of information with the budget today. Obviously, I was a little bit nervous considering the changes that he's been making recently. It seems like he's got it in for us buy-to-let investors at the moment. But actually today was reasonably positive, I thought. Firstly, it seems, I haven't had all of the detail yet, but from what he said and the guidance that's come out from HMRC today, it says that limited companies have been spared. So mortgage interest relief, it looks like, is still fully offsettable on residential properties owned in limited companies. So that's very positive, because that was really the main issue with properties bought in your own name. You couldn't offset all the mortgage interest against the rent. Well, looks like you still can with the limited company, so that's very positive. I didn't see anything about incorporation relief, so again, be able to transfer properties over out of your own name into a limited company and defer any capital gains tax, so that's very positive. The stamp duty remains. Negative aspect to that is he's kind of backtracked on the 15 or more exemption. It was in consultation. What he was saying was if you own 15 or more properties, and especially companies, they might be exempt from stamp duty, or the extra stamp duty, the extra 3%, but that's not the case. It's going to be payable for everyone and all limited companies. There are some nice positive changes there for commercial property owners. The first one being anything bought below £1 million. The stamp duty is now on the kind of slice system rather than slab-sided. So a little bit like he did with residential properties, not buy-to-let residential properties, but for homeowners. He changed the stamp duty system. Well, he's done a similar thing with commercial property. And it seems like anything you're buying below £1 million, it looks like you'll pay less stamp duty now. And if you're buying stuff at 250, 300, 350, commercial conversions, that kind of thing, it looks like you'll pay a lot less stamp duty. So that's quite positive. It also looks like with commercial buildings that are going to be rented out, the business rates that those businesses that are inhabiting and occupying those buildings, it looks like the business rates could be reduced. There's a new higher threshold for small business, so that's quite a positive thing. And the other big change is the capital gains tax today. Normally or prior to today, capital gains tax was 18 or 28%, depending on whether you were a lower rate or a higher rate taxpayer. Well, he's actually reduced that for everything except for residential properties. There's a theme here. To 10% or 20% if you're a higher rate taxpayer. So that's a very positive thing. Obviously that applies to commercial properties. So if you've got any commercial properties you're buying, or especially if you're ready to sell them, well, the capital gains tax on those is now 10% or 20%, depending on how much income tax you pay. And that applies to all other asset classes as well. So that's quite positive. I'll have more information coming out shortly. I'll be putting it out on the community on the Facebook page, and we'll be sending emails out and other updates once we get more information and more of the detail comes out from this budget day.